How much tax will you pay on $60,000 in the great state of Maine? Again, by special request. Someone said, can you do Maine? I said, absolutely. So we're going to talk about Maine taxation for you folks who are thinking about retiring there, maybe moving from Massachusetts or New Hampshire, because New Hampshire, while they're live free or die, some of this Maine is becoming a lot more libertarian than New Hampshire, actually. So you might at some point say, I'm going to escape some of the rigmarole of New Hampshire, move up to the great state of Maine to be a little bit more free, especially if you're trying to raise your own vegetables, dairy and farming and whatnot. Maine is a lot more friendly to you in Maine than in New Hampshire. So if you like what you see here, as always, subscribe down below. And then don't forget to comment, thumbs up, always help me. And then hit the bell to be notified for future content as well. So let's dive right into Maine. And of course, we'll take it right to the wonderful Peaks Island on heritagewealthplanning.com. This is my stomping grounds as a kid. And given that we're going to do Maine, I'm going to share with you that we used to jump off this right here, which with the car boat, the car ferry come and see. They used to have the wharf. This would be the wharf out here, actually. Now they changed it, made over here. I think, yeah, the wharf, the car ferry was on this side and the wharf was on that side right there. So we used to, the boat, the people boat or whatever they call it, I don't even know what they call it, would come and park right there and the car ferry park right here. And so there just used to be this little dock that you could walk down here, and there'd be some of the rich people who had their Boston whalers and whatnot would come and park their boats right there. But anyway, so we used to jump off that way up there into those waters, and the car ferry pulled back and would do this reverse motion. It create all these swells, and you jump into the swells, and the swells will take you, kick you around and all that. And for the love of Mary, I don't know how none of us died, but that was just a beautiful place. Of course, when you go in there now as a grown man and you put your toe in there, you're going to freeze to death. I cannot believe how cold the water is, and I simply cannot believe I used to swim in it. All right, actually, let's make this a little bit bigger. All right, so let's dive into it. Enough of that reminiscing, but I appreciate you allowing me to reminisce on. So let's go. Oops, I just made myself bigger. I want to make myself smaller. All right, so here, heritagewealthplanning.com. We go to tax tools, the interactive tax tool is what we're going to do. All right. And this again, who was to email me? Maine something is a guy or a lady who not emailed me, posted a thing on my YouTube channel. So whoever you are, here you go. All right, so we're going to take us to the Federal Interactive Tax Tool, and that's just a tax foundation, which you can create lots of different custom scenarios should you want. Maybe just like Jason, you're single with 2 kids, or maybe like Amber, single with no kids, or maybe you're like Laura and Seth. Maybe. Just do whatever you want to do in there. It's great stuff. They don't take any info on you. They don't know who you are. Then you go down a little bit more to smartasset.com, and we see the light blue state of Maine here, and we're going to click on that guy. I want to make sure I got everything I need. I do. And as what we do normally do, we start with, we're going to say we're born in 1952 to make sure that we're 65 years old or above. So we take advantage of the $26,600 of standard deductions. All right. Now we go down here. We're going to start with $20,000 of Social Security income and $40,000 of just IRA income. And we're going to get rid of any pension that we have in here, which is none. And that's it. Okay, good. So we have $60,000 of which $40,000 comes from IRA distributions and $20,000 comes from Social Security. And what you'll see here is we pay a heck of a lot to the great state of Maine, $1,418. Wait, that's right there. We got to change that to married. I thought we did that. All right, so that changes things a lot. So, whoa, that's a lot of tax for a single person. All right, so $20,000 in Social Security, $40,000 in IRA, and here we pay $468 to the great state of Maine, and only in 2,871 to the Feds. So again, the Feds is a big bugaboo. A lot of people are focused on states. We'll talk a little bit more in depth about the states here in just a second, my friends. But so $60,000 of income will pay $3,000, roughly $3,500 in taxes, and that's just income tax. Now, what if we swap these around a little bit? We got $40,000 in Social Security and $20,000 in IRA income. Watch what happens. We pay nothing to the state, nothing to the Feds. Why? Oh, look at that. Just, oh, man, don't you just love the boats, the lobster boats? Those aren't lobster boats, but don't you just love the boats in those pictures? Oh, man, if it wasn't so cold, I could handle it, but it's just too cold for this guy. All right, so why the big divergence in taxes when it comes to those two things? So let's dive right into this, my friends. So The first thing we got to do is we got to figure out what's called provisional income. And provisional income is how you calculate how much of your Social Security benefit will be subject to tax. And provisional income, you'll never find the provisional income rule in the IRS tax table or anything like that. It's provisional income. What that is in 1983, under Reagan, they passed the first taxation of Social Security benefits. So if you had there's a provision in the tax law. If you had a certain provision, income above the certain provision, that was your provisional income, and thus would be subject to income tax. In 93, under Clinton, we increased the provisional income rules that said if you had a certain income above provision 1 or a certain income above provision 2, you'd have some taxes on your Social Security benefits. So what happens is 0 to 32,000, none of your benefit is subject to taxation. 32,000 to 44,000, 50% of that amount is subject to taxation. And plus 44,000, 85% of that amount is subject to taxation. All right, so that's how your provisional income is calculated in terms of how much of your Social Security benefit will be subject to taxation. Now, the interesting thing is what a lot of people don't realize is how do you actually figure out what your provisional income is? And what we do is we take 1/2 of our Social Security benefit. So in this case, where we're getting taxed highly, our Social Security benefit is $20,000. So we take 1/2 of that, which is $10,000. And we add all of our other income to include our tax-exempt interest. If you have municipal bonds, they don't get taxed, but they will make your Social Security taxable. That's the issue with the municipal bonds, tax-free bonds. A lot of people don't realize that. But in this case, we don't have any municipal bonds. We only have $40,000 of IRA. And so our total provisional income is $50,000. $10,000 from Social Security, $40,000 from IRA distributions. Now, 0 to 32, none of our benefits taxed. 32 to 44, 12,000 is taxed at 50%, which means $6,000 of that range right there. And that first provision is subject to income tax. Plus 44K, 6,000 is taxed at 85%. And so what that means is here we have our provisional incomes, half our Social Security benefit plus our IRA distribution. That's our total provisional income right here, $50,000. Of the $50,000, the first $32,000, nothing subject to tax. The next $32,000 to $44,000, which equals $12,000, half of that is subject to tax. So in this case, is $6,000. And then you go down one more provision. This is a Clinton provision, where anything above $44,000, in this case, is subject to 85% of that amount is subject to tax. So we take $50,000, subtract $44,000. That gives us $6,000, times that by 0.85, which means $5,100 is subject to tax. So the total case in this scenario is $11,100 of our Social Security benefit is subject to income tax. So basically, in this case, 55%. Now, the irony of it all is before we had $40,000 of Social Security benefit, only $4,000 of that was subject to income tax, because the Social Security benefit, in terms of figuring out how much of your Social Security benefit is taxable, in terms of your provisional income, they're only using the first 1/2 of your Social Security benefit to figure that out. So the more Social Security, the less tax is all there is to it. So now we take our $11,100 of taxable Social Security, add to it our $40,000 of IRA distributions. Now, if you had any municipal bond interest, it would not go into play here. So that is our adjusted gross income, $51,100. Our Social Security benefit taxable plus our IRA distributions. Again, this would not have any effect on your municipal bond income. It would not affect this because municipal bond is tax-free, but municipal bond income would certainly affect how much of your Social Security benefit is taxed. But we do have $26,600 of standard deductions. All right, so our taxable income isn't $51,000. Our taxable income is actually $24,500. All right, so there's our taxable income, $24,500. The first $19,700, something like that, I can't remember off the top of my head, for a married couple filing jointly is taxed at 10%. The next amount up to $77,000, some odd number, is taxed at 12%. You add those two together, and there you go for your $3,300 odd dollars of taxation in this case, with $20,000 of Social Security, $40,000 of IRA. You flip them around, and it's nothing. Nothing, because you have $24,000 of adjusted gross income. You factor in your $26,600 of standard deduction, you got no taxable income. That's the difference. So remember that. Social Security delayed is more tax money you don't pay. Well, I got to make a rhyme with that. Social Security delay, less taxes you pay. Ooh, that's good. Social Security delay, less taxes you pay. Everybody now, Social Security delay, less taxes you pay. That's pretty good. All right, so now let's look at some of these towns. I know there's Brunswick, there's Scarborough, there's Old Orchard, and these are the cheapest places we have in terms of tax friendliness in Maine. When I'm looking at this number over here, they ain't that tax friendly. But let's look at, so here we're looking at a retired person, just one individual who's got $50,000 of income, which includes $15,000 of Social Security, $10,000 from a pension, $15,000 from IRA income, and then $10,000 of wages. So we're going to say in Brunswick, Maine, we'll say Waterville, Maine. We'll just use that for an example. This person pays $6,628 to the Fed, to the total taxes, to the state and the feds. Look at the property tax, my friends. Woo! What they do, smartasset.com, is just all algorithms, which is freaking awesome. They take the median property tax paid in each of these towns. Waterville, Maine is what we're going to look at here. They divide that into the median property value, and whatever your tax rate is, that's going to get your effective property tax, the median property tax, 1.61. Whew. Sales tax is high. Fuel tax is low. Yeah, it's on the median threshold there, not super low, not super high, I should say, but definitely that's still. But look at that, 1.61, big sales tax, big property tax, big income tax, and so your retirement tax friendliness in this case is 28%, and that's the number 4 best state in city in Maine. Has a 28% retirement, 28 number for his retirement tax friendliness. And what they do is they weigh this 4 times, weigh this 3 times, weigh this 2 times, weigh this 1 time. They get that, they derive that number. That's again like Connecticut. Connecticut was even worse than that, but not much. Let's see here in Georgia, 78% was on the top 10. Alaska was 99% in the top 10. Some of the other states are not just in the South, though. Indiana, I don't know if Indiana, but Illinois, 55% was in the top 10. So Maine is on the bottom end. But see, the problem with this is we're taking this $15,000 or $10,000 of wages, and you're not. And I just showed you, if you only have Social Security as a bulk of your portfolio income, or bulk of your retirement income, plus a minimized IRA distributions, you're not going to have any income tax whatsoever. So this is kind of a non-starter. But that right there isn't. That's why I would make this my number 1 in terms of waiting for retirement tax friendliness, but they make it number 2. I think this should be number 1, but either way. So there you go, my friends. Maine, not looking great in that regard, but let's just, while we're looking at, actually, let's see if they show us here we go. And here's up in what's this? Is this Aroostook County? Look at that. That's a huge county. We got Piscataquis, I can't remember. Somerset County. This is down here where I was from, Cumberland County. All right, so that's the southern part of Maine, is the Portland area, whatnot, Kennebunk. Just some beautiful places to be, but it ain't cheap. No other way around that. So as always, you like what you see here, don't forget to subscribe down below. Comments, questions, concerns, always welcome. Thumbs up, always helpful. Go to run your numbers at heritagewealthplanning.com, the tax tools, interactive tax tool, and run your own numbers to see what you come up with. We'll see you next time. Thanks, guys.